Hey there, it is Corey here from Verse. I hope that you are going well and are safe and sound in these lockdown times, at least for most of us in Victoria. We are again coming back to you with a market and economic update, and I'm again joined by Ashley Bishop, one of the advisors in our team here at Verse. Ash, thanks for joining us again, as always.
My pleasure, Corey. Nice to be here again, and on a week that's we had plenty of information about the outlook for the future and where Australia is and financially anyway. So yeah, a lot going on, so a lot to talk about.
Yeah, absolutely. So there has been a couple of major announcements this week, as you mentioned. The first one being on Tuesday, which was the announcement of the changes and the extension of the JobKeeper and JobSeeker schemes, which you're shortly going to give us a rundown on. The second was the economic update from the federal government yesterday. It was the first economic update they've given us Aussies since the pandemic started back in March, which feels like a lifetime ago for me, and I know many of you as well. And you're going to give us a rundown, Ash, as to the key things coming out of that update as well. So without further ado, let's dive in. JobKeeper 2.0 was announced on Tuesday, as well as changes to JobSeeker and an extension there. So step us through what the announcement was. It's been waited on by many for a long period of time.
Yeah, absolutely. So what has happened with JobKeeper and JobSeeker is that first off, they have been extended. And that is really important because there's been a lot of talk around the so-called fiscal cliff for the end of September of this year, which had a lot of economists, general just families and the population, and the opposition as well was really worried that that was something that the government would consider, given that they tend to be a more fiscally conservative government. What they've done is extended both of those schemes well into 2021, which is a huge positive, not just for the economy, but for a lot of families and individuals, in particular those who have been in industries or companies that have been hit hard by the restrictions that have been put in place due to the health crisis that we're in, that we've talked about and the government's talked about, has had real economic consequences as well. In terms of the practicalities, we talk about JobKeeper first. You can see here on the screen I've shared that the current rate of payment is $1,500 per fortnight. That was brought in at the end of March 2020. The actual payment started a few weeks later. How that worked is that if a company, if we use, for example, smaller businesses with less than $1 billion worth of turnover, if their revenue dipped by 30% to a corresponding period from the 12 months previously, then they were eligible for the payments, and their employees that they put on the scheme would begin to receive $1,500 per fortnight regardless of their salary. Now, that meant that some people were obviously getting less, but for many people, they were also getting more than previously in what they were getting. What the government is doing, so from the end of September, when the scheme was originally proposed to cease, from that point, anyone who was working 20 hours a week or more from in February 2020, so before the pandemic hit us in March, those people will continue to receive $1,200 a fortnight for the remainder of 2020, and in January 2021, as you can see there, that will reduce to $1,000 a fortnight. So there'll still be income support payments. However, they will be reduced. For those people who were working less than 20 hours a week in that February 2020 period, they will have their income reduced by a little bit more. So their payments will be halved to $750 and then on to $650 from January 2021. The thinking behind that is that those were the people who are more likely to be receiving more than perhaps they were when they were employed. So that should better reflect their income at the time prior to the pandemic. Obviously helps the budget bottom line, which we'll come on to in a moment, but continues to maintain some support. And though the details still will be ironed out, some of those people will still be able to receive some of the job seeker payments as well. So there'll be a bit of double dipping on that side, but the detail, as I say, is down the track. In terms of the actual job seeker payment, that is slightly different. So that'll continue to receive the roughly $550 a fortnight going forward, which is the slight increase in the New Start. However, the coronavirus supplement that the government brought in back in March in order to ride out this period for 6 months, that $550 per fortnight is being reduced to $250 per fortnight. So a decrease of $300 per fortnight. Again, that is from the end of September. What happens to that? We don't know. The assumption is that more announcements will be made in the October budget, that the federal government will provide sort of more detail and more numbers going forward from there.
Thank you, Ash. That is an easy to digest rundown. And I personally think the government's handled the revision of JobKeeper quite well. They've made some pragmatic decisions. They've extended the stimulus, which we need to put that kind of floor under the economy and make sure we can get things moving again. And we'll wait and see what happens over the next 6 months. It's a bit of an unknown, of course. So there's a possibility of it being extended beyond March next year too.
Yeah, Scott Morrison highlighted the fact that he would prefer those support, then particular JobKeeper, to finish in March next year. But they've also been very clear that they're not going to be locked into a decision now. They're going to be very much dictated by the health and economic considerations at the time, which is a flexible approach. I would argue the right approach at this time.
Well said. The announcement yesterday, the economic update that came from the Federal Treasurer, step us through what were the key takeaways from that announcement?
Look, the key takeaways, as to quote Josh Frydenberg, were eye-watering. So in terms of the budget deficit, if we remember before the virus hit, the government, Josh Frydenberg, Scott Morrison, were championing the fact that the Australian government, or the Australian budget, was going to return to surplus. And they had the back and black mugs, and everyone was sort of on board with that. And the first one in a decade or so, it was quite a big deal for them. Obviously, conditions have changed. And if I bring up a bit of a quote, it's from the AFR yesterday. In this financial year, so last financial year, the budget deficit was around 85 billion, which as a number doesn't necessarily mean much to a lot of people. But this, I guess this line here, or sentence here, is pretty important, is that for this financial year, the budget deficit is expected to be close to 180 billion, which, as it says there, is 9% of GDP. For comparison, the last time we saw those sort of numbers was around the end of the Second World War, which, if you think about all of your money going towards defeating the Axis powers and then recovery after that. So it puts a bit of historical context in place and gives us an idea of what those numbers actually mean. Keeping in mind that those numbers are based on Melbourne's lockdown finishing at the end of the 6 weeks in late August, and not really having significant sort of roadblocks in the way after that, which is to be kind, rosy assumption. For those of us living in Melbourne, it perhaps feels like that lockdown might not be as smooth to get out of as others would like. So that is going to be a really important consideration, that we're talking about historic deficits, but importantly, to match a historic time. I mean, this is in theory a once in 100-year virus. The spending and income support that's going to be required to survive this period and allow Australia to grow out of it and keep people with income instead of having a relatively stable financial situation is going to be much more important than these deficits. Because keep in mind, all of that money that's being spent by the government, for the most part, is going into households, people's wallets, going into businesses, which will allow Australia to move out of this period with greater confidence once the pandemic actually ceases. So that's a really important point. Just having a deficit isn't a bad thing necessarily if you're spending that money on the right things, which at the moment I would argue they are. In terms of how that affects our debt, because obviously you have a budget deficit, it means you're accruing debt. If I show you a bit of a chart here, which I'll bring up. At the moment, entering into 2020, Australia's debt to GDP ratio was around 45%. So you can see here that you've got these percentage of GDP here. We're in that sort of just over 40% there, around 45%. That is obviously going to grow from here.
Can you, Ash, just explain the concept of GDP? We've all heard it, but we all might not be across exactly what it is.
Yeah, of course. So GDP is gross domestic product. So it's effectively the calculation of all of the goods and services that Australia produces and create into a sort of monetary value. So that's all the work we do, all of the services we offer and domestically, and export internationally, that all comes under GDP. So if GDP is growing, that means the economy is growing. So in theory, economic conditions are better, people are getting paid more, there are more jobs. If GDP contracts, that means that we're producing less, so there's less jobs, less option for wages to increase, and conditions become harder. In terms of debt to GDP, it's important to remember that, again, having a level of debt is not necessarily a bad thing. It just depends on how you manage, or how the government manages it, and what they're going to use that money for. To put it into historical context, as we can see here, if we're around that 45% of GDP or debt to GDP and growing from here, historically you can see that yes, we are at pretty high levels compared to the last, post-war period. But prior to the Second World War and through the Great Depression and the First World War, Australia was living with these levels of debt on a year-by-year basis. And as you can see, it was possible to pay that debt down with a combination of good fiscal management and also growing the economy. Remember that after this pandemic ceases, Australia will grow again, the economy will grow again, we'll produce more, GDP will increase again, and we'll be able to reduce some of these debt figures. But it really provides historical context, the fact that yes, it feels like that we're in a huge amount of debt in Australia, but historically, just for Australia, we're really not. And importantly, if I share one more screen, if we compare ourselves to other nations. Now, admittedly, this chart is a couple of years old now, so where Australia's debt to GDP was around 20%. But if we're talking about it being 45%, you can see some of the other nations there that we historically compare ourselves to, other sort of Western nations and so forth. And some of the numbers there are pretty stark from a couple of years ago. And those have increased as well. So the US is now well above 100% in terms of debt to GDP, where it was only 70% or 77% previously. Greece, for example, is one of the countries that we saw. That's not on this chart as far as I can see. But ultimately, their debt to GDP is 120, sort of close to 140% at times. So Australia's debt levels are comparatively low to other nations. That's something the government's been really keen to stress. So we can afford what's happening now. Interest rates are low, but as long as they're sort of making sensible decisions, like providing income support to Australians who need it, then that's certainly the right thing to be doing. So yes, the numbers are eye-watering, to again quote Josh Frydenberg, but they are sustainable over a period of time.
Well said, Ash. I think that gives us some really good context for where we're at and where we are relative to other nations as well. And like you said, we have the capacity to pay down debt over time, and we need to extend the debt to give people the capacity to keep their businesses moving, to keep employment up, to keep consumer spending up, and make sure we can recover as well. So very well said. I guess finally, in terms of the uncertainty and the changes that we're seeing flow through, do you have any advice for our clients in terms of their investments and their superannuation, and how should they be thinking about those?
Yeah, look, I think it's important to remember that these times will pass. The pandemic won't be with us forever. We will move out of this, and markets will reflect that as well. So over the last few weeks, markets have not really moved significantly. A few days where they're up a little bit, back down a little bit the next day. It's been largely flat, if maybe slightly increasing over a period of weeks. And that really reflects the fact that we've gotten used to this period in a way. There are still risks out there, but ultimately, if you've got a long time frame, you've got a nice, well-diversified portfolio, whether it's through asset allocation or just having some index funds and so forth, they're giving a wide exposure to different companies and regions, then that is certainly a strategy that's going to continue to work going forward, keeping in mind your time frame as well. And importantly, and we talk to all of our clients about this on a regular basis, Corey, if you've got control of your cash flow and you've got an emergency fund there, income is going to be the really important point here. It's what the government's providing income to people for. If you can continue to meet your expenses, you won't need to dip into your investments if they do come down, and you can potentially even put more in as dips happen, so you can continue to enjoy that sort of rise over a period of time when we do eventually recover.
Well said. Ash, again, as always, thank you for your advice and guidance and staying so abreast of the economic changes that we're going through as well. We appreciate it. To our clients, we will be linking up with Performance Property in the short term to provide you a property market update, in particular, what's going on in the Melbourne property market. We are seeing prices ease off, so we want to set the best expectations we can with you there. There's many of you going through at the moment and pondering property decisions and changes as well, so you'll find value in that update in the coming weeks. And aside from that, we are continuing to work remotely here at Verse. Things tend to be going quite well. Our team is well. They're healthy, they're happy, the team's growing. We don't have any plans at this point in time to be back at Hub Southern Cross. That is our home. We'll be back there soon enough, but when the restrictions are lifted and it makes more sense from a health perspective to be there, we'll be there. In the interim, make sure we're all wearing these. My family have got a whole bunch of them come through in recent times. Plenty of people are making them. Look after yourselves, stay safe, and we will talk with you very soon. Take care.